Hello, in this episode we will explain what is income statement, how to read it, analyze it, and we will discuss what is the limitation of this report. This video is very educative for any business owner, investor, or self-employed. Now, what is an income statement? An income statement is a financial report containing total income and total expenses for the company. It gives the report reader a true and reliable information about the profit and loss for the week, month, quarter, or a year depending on the request of the financial statement user. I have prepared a detailed example of an income statement report, and I have divided for 8 parts to easily explain and help you understand what the key point behind the account classification within the income statement. Starting by the first part, it contains the revenue of a company, and as we all know, this part is directly related to the client, and I have colored it with the same green color. Part 2 include the main raw material or goods that is our main business consists of. For example, if you are a furniture seller, restaurant owner, retail trader, you should register the cost of your main activity in this account. After the part 2, it's important to mention the gross margin, which indicate the profit of the company before any expenses. Part 3, it contains all your external expenses, which is like utilities, rent, maintenance, professional fees, advertising, and it's related with this kind of supplier. Part 4, salaries related to employee. Part 5, all the taxes paid or due to government or any legal authorities. Part 6, bank charges and commission, which is related to bank and financial institution. Part 7, depreciation for all tangible and intangible assets, which means that each asset the company holds are depreciated for fixed amount or fixed percentage. Part 8, where to find the profit and loss for the company, which is the favorite part for the investor and owners. Now, let's analyzing the income statement. I am not going to talk about 100 of ratios, which they are very important and useful. However, I will make it much easier by following a logic ideas. I already put 3 questions so you can use it while you analyzing the report. Now, the most important account for any report reader is the revenue. So I will calculate the percentage for all other accounts based on the revenue number. The gross margin percentage is 71% and the net earning is 41.4%. So any investor or business owner would be very satisfied of such result. But now, let's go deeper. We have an increase 1% in gross margin, and that would arrive from 2 options. Maybe the company is increasing the prices, or she found a new source of goods, and we will verify these 2 options. The delivery and fuel cost is notably decreased, which is a bit surprising. How we have an increase in sale and same time decrease in delivery cost? So we have to think in 3 options. The company may be changed to a new delivery supplier, which is positive for the company. 2, the client maybe start to visit our branch to collect their goods. Or the 3rd option, which is the riskier situation, that our sales are decreased in volume because the company increased the prices of goods, and that's why we should investigate more in details, and maybe that's why the increase in 1% in gross margin. So I hope you are now seeing the logic how we connect the account to each other and start to put a different scenario. The amount of repair is increased. Maybe we have bought new assets and need a maintenance, or our old machines need to be replaced, and we cannot, and we can, yes we can, and we can know easily if the company bought a new assets if her depreciation amount is increased, which is not in this case. As you can see, the amount for amortization and depreciation are the same for the 2 years. So our machine may be outdated because we are paying too much maintenance and repairs. An additional note, the existence of bad debts as expenses every year sign that the company is not knowing her customers' credit history. Then, bad point on management performance. If we jump down to financial interest and commission, they are decreased, which means simply maybe they have a loan, they are paying a loan or overdraft. Well, it's good. Finally, the biggest limitation of this report, it does not show us the liquidity in the company. For example, yes, we have a big profit in the company, as you can see, but this does not mean that we have this amount ready to use or available, because it may simply be uncollectible debt with customer. I hope by this small explanation I have succeeded to enlighten you with the new ideas and new approach how you should read a financial statement, and how you can analyze and put in your mind a lot of questions like you are investigator and doing step by step to know the truth about the company that you will invest. Thank you so much. I wish you support, and I hope to see you soon.